Hello everyone, I am Pratap here. We are at part 1 of lesson 8. In this lesson, we discuss about trend based on swing highs and lows. And this is one of the most efficient method of calculating the trend. First of all, what is a trend? A trend indicates the direction of the price movement in a stock. I repeat, trend indicates the direction of the price movement. So what is the direction? A direction can be a up direction or it can be a down direction. What this up direction indicates? Up direction indicates prices are moving up. When prices are moving up, we have to buy the stock. Once it reaches our target, we need to sell to get the profits. What about downtrend? It indicates prices are moving down. When prices are moving down, what we should do? We should sell. And then later we need to buy. That is called short trading. That way we get the profits. That means we can take our buying, selling decisions based on the trend. Always remember, we cannot trade against the trend. If we are trading against the trend, always we get the losses. If market is in the up direction, but if you are selling, what will happen? You will get losses. If market is in the down direction, you are buying, what will happen? You will get losses. That's why always we have to trade in favor of the trend or in the direction of the trend. That is the important point you should understand. Always you should trade in the favor of the trend, but not against the trend. This is the reason why we need to understand what is the direction. Because stock market always there are up and downs, right? When there are up and downs, how do we understand the direction? For that, we are learning a method for identifying the trend. So by end of this video, you will be able to understand how to identify the trend. Trend can be classified into one of these three types. One is uptrend. In short, we call up. Second one is a downtrend. In short, we call DN. We have one more third trend is also there. That is called sideways. Sideways means prices are moving within a range. You already know in the first lesson or second lesson we learned when demand and supply are equal, prices will be moving in a narrow direction. So that indicates the sideways. The trend is in sideways. In short, we call it as SW. So these are the three different types of trend you will be seeing, and you will understand how to identify these trends. Trends can be identified by using these four formation types. What are those formation types? The first one is higher high. In short, we call it as HH. You should memorize these four terms. I will explain what exactly the meaning of each. First, you people should memorize all these terms. First one is a higher high. In short, we call HH. Second one is a higher low. In short, we call it as a HL. Third one is a lower high. In short, we call it as a LH. And fourth one is a lower low. In short, we call it as a LL. So we have four types: higher high, higher low, lower high, and lower low. In short, we call HH, HL, LH, LL. First, you spend some time on the slide for memorizing these terms. So what is a higher high? Let us understand by comparing two candles. And in these two candles, one is the recent candle and another one is the previous candle. The one previous to the recent is a previous candle. What is the rule? Higher high, if you want to understand what is higher high, recent candle's high should be higher than previous candle's high. Then we can call it as a higher high, or in short HH. So let's look into these two candles. This is the first candle. That means it is the previous candle. You know what is high and low of the candles. Already we learned in our first lesson. This is the high and this is the low. The higher wick, that is the high value in the higher wick, and the low value in the lower wick, that is the low. And this is the present candle or the recent candle. And this is the previous candle. Compare this previous candle and the recent candle. And compare the highs of these two candles. What did you observe? Recent candle's high is higher than previous candle's high. This is previous candle's high. This is the recent candle's high. This recent candle's high is higher than the previous candle's high. Then we can call it as higher high. So this is higher high. HH is the short name. So is it clear what is higher high? Now let's move on. And one more. Now previous one is the bullish candle and this one is the bearish candle. Does it make any difference? No, it doesn't make any difference. Just to indicate, I am showing you one more candle. This candle, bearish candle, is the recent candle. This bullish candle is the previous candle. Compare these two candles. Whether it is bullish or bearish, it doesn't make any difference. The reason is we are comparing only high of the recent candle and the high of the previous candle. When you are comparing, if your recent candle's high is higher than previous candle high, then we can call it as a higher high, HH. So even this recent candle also got HH. HH indicates higher high. And HH also indicates recent candle's high is higher than the previous candle's high. That is the exact meaning of HH. Recent candle's high is higher than the previous candle's high. So when you are comparing the candles, whether it is bullish candle or bearish candle, it doesn't make any difference. We just look into only the highs of the both the candles. Now let's look into higher low. You are comparing two candles. Recent candle's low should be higher than the previous candle's low. Recent candle's low should be higher than the previous candle's low. Then we can call it as higher low. So let's compare two candles. This is the recent candle. This is the previous candle. And this is the recent candle. Now compare these two candles. What is it we are comparing? Lows we are comparing. Previously we compared highs. Now we are comparing the lows. When you are comparing the lows, the recent candle's low should be higher than the previous candle's low. Now when you are comparing both these lows, recent candle's low is higher. That's why we are calling it as a higher low. In short, HL. HL indicates recent candle's low is higher than the previous candle's low. Hope you got the point. Now let's look into one more candle. And this bearish candle is the recent candle. This bullish candle is the previous candle. When you are comparing both these candles, which one we are comparing? The lows we are comparing. Is the low of the recent candle is higher than the previous candle's low? Yes. Then we get HL. HL indicates higher low, which means recent candle's low is higher than the previous candle's low. See, in these short names, the first one indicates higher or lower, and the second one indicates candles high or candles low. Because it is L, it is a candles low. And the first letter is H, it is higher than. So that way you have to understand. You should not confuse. The first one is day high and day low. You should not get confusion. That is wrong. The first one is not this candle's high or low. This first high is comparing the two candles, whether it is higher or lower. The second letter is the candle's high or low. In the second letter, if it is H, it is candle's high. In the second letter, if it is L, it is candle's low. And the first letter, if it is high, when you are comparing two candles, the value is higher. Or in the first letter is L, it indicates when you are comparing two candles, the value is low. That is what it indicates. So do not get confusion. You should understand the order of these two letters. Okay. So let us look into the next type, that is lower high. What is lower high? Recent candle's high should be lower than the previous candle's high. When you are comparing the recent candle's high and previous candle's high, the recent candle's high should be lower. Then we can say it is a lower high. Let's compare two candles. Which one we are comparing? Highs we are comparing. Is the high of the recent candle is higher or lower compared to the previous candle high? It is lower. Previous candle's high is higher. Recent candle's high is lower. Because we are comparing with the recent candle with the previous one, and because the high is lower than the previous candle's high, we are calling it as lower high. In short, LH. Similarly, we are comparing one more candle. Now this is the recent candle. The bullish candle is the recent candle, and this bearish candle is the previous candle. Now when you compare, which one you are comparing? Highs we are comparing, both the candles high. When you are comparing both the candles high, what is the position of the recent candle's high? Is it higher or lower? It is lower. That's why we are calling it as lower. Which one you are comparing? High. That's why it is lower high. LH indicates lower high. Now let's look into the next type, that is lower low. What is lower low? First L indicates when you are comparing two candles, the present candle should be lower. Which parameter in the present candle? The second letter is telling. What is that? The low. The second letter L indicates low of the candle, low of the recent candle. So recent candle's low should be lower than the previous candle's low. Then it is called lower low. So compare these two candles. This is the present candle and this is the previous candle. Present candle means recent candle. So this recent candle's low and previous candle low we are comparing. When you are comparing both these lows, present candle's low is higher or lower in this example? It is lower. That's why we are calling it as a lower low. LL. LL indicates lower low. Recent candle's low is lower than the previous candle's low. That is LL. Let's compare one more candle. When you compare this bullish candle and this bearish candle, this bullish candle is the recent candle, this bearish candle is the previous candle. But which one we are comparing? We are comparing the lows. So recent candle low and previous candle low we are comparing. When you are comparing, the recent candle's low is lower than the previous candle's low. So we are saying it as LL, lower low. And these four parameters are helpful in identifying the trends. We already learned three types of trends: uptrend, downtrend, and sideways. So let's start with uptrend. The point you should understand, in uptrend, higher high and higher low between the candles, that indicates the uptrend. Higher high should be there when you are comparing two candles. The present candle or recent candle should have higher high and higher low. Now compare these two candles. What we have to compare? Both lows and highs, both you have to compare. First let us compare the highs. The recent candle's high and previous candle's high. When you compare, what is this recent candle's high? Is it higher or lower? So obviously it is higher. So we can say it is higher. Which one you are comparing? Highs we are comparing. So it is higher high. That is HH. Exactly the same way. Now compare the lows of both the candles. Recent candle's low and previous candle's low. When you are comparing, what is the position of recent candle's low? Is it higher or lower? It is higher. Which parameter is higher? The low is higher. Recent candle's low is higher than the previous candle's low. Because it is higher, we get H and the parameter is L, so HL. So that means the present candle's low is higher than previous candle's low. That is higher low. So what is this uptrend indicates? Higher high and higher low between the candles indicates the uptrend. Similarly, the next candle is also having higher high and higher low comparing with its previous candle. So when candles are maintaining higher highs and higher lows, that indicates the uptrend. But remember, when you are comparing candles, that indicates a short-term comparison. So the trend you have to see from the short-term point of view. Short-term means small duration. Long-term means long duration. That way you can understand. So use this candle comparison only when you want to understand the trend for a short duration period. Don't go for candle comparison if it is a if it is not a short duration time. If it is not a short duration time, don't compare the candles. Then what we have to compare? That we will see very soon in this video. So first, to make you understand what is a trend, I am comparing with the candles. Later we will get into our main discussion. First you get clarity on the concept. Because I am giving this short duration comparison to calculate the trends, you should not fix in your mind, this is holds, this is always a perfect method. Perfect method means comparing candles. Comparing candles is good approach, but is only for short duration. This kind of comparison holds good. You should not forget that point. Okay, but otherwise, uptrend when always produce higher highs and higher lows. If it is not higher highs and higher lows, then that should not be uptrend. Hope it is clear. I repeat again, in uptrend always between the candles we can see higher highs and higher lows. As long as higher highs and higher lows continues between the candles, the uptrend will be continued. This is the important point you should remember. I repeat again, as long as higher highs and higher lows are continued between the candles, the uptrend will be continued. So this is about how to identify the uptrend. Then what about downtrend? Lower low and lower highs between the candles indicates the downtrend. So during the downtrend, always candles maintains lower highs and lower lows. Now compare these two candles. Compare the highs. Is it higher high or is it lower high? It is a lower high. Compare the lows. Is it higher low or lower low? It is a lower low. So we have lower high and also we have lower low. Now compare these two candles. Compare the highs and compare the lows. When you compare the high, what is that? It is having lower high. What about the low? Lower low. That means present candle's low is lower than the previous candle's low. Present candle's high is lower than the previous candle's high. And such kind of pattern you can recognize during the downtrend. Between the candles, lower highs and lower lows are maintained. That indicates the downtrend. That means as long as the candles are continuing with lower high and lower lows, the downtrend will be continued. This is what you should understand about downtrend. Is it clear? Now let us understand the third type, sideways. Higher high and lower low between the candles indicates sideways. Higher high and lower low. And there is one more also, is there one more point? Lower high and higher low between the candles also indicates sideways. In any of these two types. Let us look into the candles to understand clearly. What is that you observed when you are comparing? So this recent candle is having higher high and lower low. That is what first point is saying. See? Higher high and lower low. That means this is not related to uptrend, it is not related to downtrend. Why? Uptrend we have higher high, this point is satisfied. But what is the next point in uptrend? We should have higher low we should have. But this is having lower low. because the condition is failed, it is not uptrend. Then what about downtrend? We should have lower low. So this point is satisfied. But we should also have lower high, but it is having higher low. Sorry, higher high. That is the reason why it is not satisfied even downtrend. If the pattern is not satisfied both uptrend and downtrend, what is the remaining? Sideways. So that's why in sideways market you will see such kind of patterns between the candles. What is the another type? Now compare these two candles. When you compare high, it is having lower high because this high is lower than the previous high. Similarly, when you compare these two lows, this is higher low. Now look into this point. Lower high, so we have lower high, and we have higher low. This is higher low. So that's why it satisfied both these points. So if the pattern is like this, or if the pattern is like this, in either way, it indicates sideways. The trend is sideways. Sideways means it is not uptrend or it is not downtrend. So this is about how to understand the trends based on higher highs and higher lows or lower highs and lower lows between the candles. But this kind of comparison between the candles, as I already told you, it indicates a short-term comparison, like 1 day, 2 days or 3 days maximum. Because markets are dynamic. Every 2 or 3 days, at least we see some changes. It looks like all of a sudden trend is changed. So that is the reason why, if you want to understand the trend in a perfect way, instead of comparing between one candle and next candle, that means previous candle and recent candle, instead of using that, compare with the bunch of the candles. What is the bunch? A small changes between the candles, don't consider. But consider a bunch. Like maybe a bunch means it can be 6 candles or 7 candles or 8 candles. But what is the limit? Because of the limit we cannot define. So we defined another method called swing. What is swing? You know the cradle, right? So when you swing by using the cradle, what you can observe? The cradle moves from one extreme end to another extreme end. Maybe one extreme end is the down or another extreme end is the low. So such kind of movement. Basically swing indicates the movements. Exactly the same way the prices also, the movement of the price from one extreme end to the another extreme end is called swing. The movement of the price from one extreme end to another extreme end. Let us understand this point with example. Now compare this price movement. So in this price movement, what is one extreme end here? This point. Let me draw a line. Can we say this is one extreme end? Yes. Then what is the another extreme end? Here. So we have found two extreme ends. So this is called a swing, a movement of the price. Always in stock market, the movement is in the form of the swing. In a swing, we can find a high point and a low point. This is the high point and this is the low point. These high points are called swing highs because during the swing, this is the high point. Similarly, this low point is called swing low. So during the swing, this is the low point. Again in the next swing, maybe this is the low point. You may find some other high point. Maybe prices go up to here, again it will go down. Then this is the high point. Or it may go further up to here and then go down. This is going to be the high point. So always you should understand. So when you are taking a bunch of candles like 4 or 5, that is not correct. If you are taking a bunch of candles between the swing movements, that is the correct way of understanding this concept. If I say bunch of candles, the meaning is different. If I say the bunch of candles between the swings, the meaning is different. If a bunch of candles means you may take these 3 candles, it is a bunch, or these 4 candles, it is a bunch. And if you do that kind of comparison, it is wrong. Then what is right? The bunch of candles between the swings. So such kind of analysis we are doing now. We are taking bunch of candles between the swings. So how we are identifying the swings? Based on the swing highs and swing lows. So let us understand the swing high and swing low even in a better way by seeing with even a better example. Look into this example. Assume this is the highest point. After that, prices are going down. So this is the swing high. Assume this is the lowest point in this swing. So this is the swing highest point. This is the lowest point. Why we are calling this the lowest point? After that, prices are not going down. The prices are going up. How can you say prices will go up? That's why after checking few candles, you need to confirm. Because this is an example, before prices are moving, I am drawing a line here. But in the real market, after some movement, you need to confirm this is the low. Probably after reaching a certain level from this bottom point or the low point, maybe prices crossed maybe this level. You can confirm now prices are going up. At that time, you can define this is a swing low. Now prices are moving up, further moving up, further moving up. And now let us assume from this point onwards, prices are going down. If prices are going down, obviously this is going to be a new swing high. This is the previous swing high. And this is the new swing high. And assume this is the new swing low. This is the new swing low. From here again prices are going up. So draw a line here. This is the new swing low. So this is how you need to understand. See here, this is one swing. This is one swing. And this is the second swing from here to here. And this is the third swing. And this is the fourth, but it's not yet completed. We have ended our example with this. So basically we are focusing on a swing 1, swing 2 and swing 3 in this example. So when you are looking into this first swing, we have a swing high and swing low. And if you look into the second swing, again we have a swing low and swing high. Again if you are focusing on this third swing, we have a swing high, we have a swing low. Any swing, you have to find a swing high and swing low. That means that is the highest point during that swing or that is the lowest point during that swing. And this is the lowest point in the next swing and this is the highest point in the next swing. Now you need to compare one swing with another swing. Now compare this swing high and this swing high. Similarly, compare this swing low and this swing low. Previously, we compared high and lows of two candles. Now we are comparing high and low of two swings. This is the difference you need to understand. And calculating your trend based on this mechanism is a perfect trend calculation method. Instead of calculating the candles, because the candles is the too short to understand the real direction of the trend or the real market direction. Comparing candles is too short. That's why I told you, you have to compare only candle by candle if it is a very short duration trend calculation. Otherwise, don't get into that. This is the efficient. Which one? Swing, comparing the swings. So to understand this mechanism, first you should understand what is a swing. That is what I explained in the previous slide. And even before that, you already learned what is higher high, what is higher low, what is lower high, what is lower low. You already learned. Previously, you already practiced by comparing the candles for finding higher high, higher low, lower high, and lower low. Now, same concept, now you are going to apply for swings, between the swings. You are comparing the high of the swing and high of the next swing. Or you are comparing low of the swing and low of the next swing. So let us look into such kind of comparison for all the three types of the trends. So let's start with uptrend. The higher high and higher low between the swings indicates the uptrend. Previously what you learned, higher high and higher low between the candles. That is what you learned earlier. Now instead of candles, now what is the point now you are learning? Between the swings. Now it is not between the candles. Now it is between the swings. So this is what you should understand. Okay, now let's compare. Let us take an example. Take this example. In this example, take the first swing. This is the first swing. So this is the swing high, this is the swing low. So let us mark swing high and swing low. So what is the next swing? So from here to here, this is the swing. In this swing, which is the swing high? This is the swing high. Now compare this swing high and this swing high. When you are comparing this present swing high and previous swing high, is present swing high is higher or lower? It is higher. Which is higher? Swing high is higher. That's why we have to say it is higher high. This swing high is higher high. HH. Exactly the same way. Take the next swing. This is the next swing from here to here. This is swing high. This is swing low. Now compare this swing low with the previous swing low. Now this swing low is higher than the previous swing low or lower than the previous swing low? Which one? The present swing low is higher than the previous swing low. This entire is the previous swing and this entire is the present swing. So this low, present swing low is higher than the previous swing low. So we are calling it as higher low. That is short name HL. We got higher high and higher low. If you get higher high and higher low, what does it indicates? Uptrend. That is what we specified here. Higher high and higher low between the swings indicates the uptrend. So in uptrend, higher high, higher lows will be continued. I have shown you only one swing. Like this, you will see the price will again go up, and it will go above this higher high. That way, next time again when the prices are coming back, it will maintain higher low. So always in the uptrend, higher highs and higher lows will be maintained between the swings. You should not forget the word swings. Between the swings. Previously we learned between the candles. Now we are learning between the swings. I repeat again, in uptrend, always higher highs and higher lows will be maintained between the swings. So this is about the calculation of the uptrend. Now let us calculate downtrend. How to calculate? Lower lows and lower highs between the swings indicates the downtrend. Between the swings, lower high and lower lows should be available. You can say either way, lower low and lower high or lower high and lower low. The order is not important. But both should be there. Lower high and lower low should be there. Then it is a downtrend. Now look into this example. What is the first swing here? This is the first swing. So first swing, you identify what is swing high and what is swing low. So this is swing low and this is swing high. Now compare this swing low and swing high with the next swing. What is the next swing? This is the next swing. In this next swing, we have a low point. Swing low point is here. Now this swing low is lower than the previous swing low or is it higher than the previous swing low? So this low, that means the swing low, is lower than the previous swing low. Then we can call it as a lower low. LL we got. Now exactly the same way, compare the next swing with the previous swing high. What is previous swing high? This is the one. What is the present swing high? This is the one. This is the previous swing and this is the present swing. In the present swing, the high and previous swing high, when you are comparing, the present swing high is lower or higher? So it is lower value. Previous one is higher value, now lower value. That's why the present swing is having the lower high. We are calling it as LH. LH indicates lower high. That means the high of the present swing is lower than previous swing high. So in downtrend, if LL and LH are maintained, that means lower lows and lower highs are maintained in the downtrend. They keep on, you will be observing lower lows and lower highs between the swings. Between the swings, that point is important. So between the swings, if lower lows and lower highs are maintained, then it is called as a downtrend. That is what we have specified here. Lower lows and lower highs are maintained between the swings in downtrend. So did you understand how to identify downtrend? Okay. Now let's look into the third type. What is the third type? Sideways. Now look into this sideways, how to identify. Lower high and higher low between the swings indicates sideways. We have multiple points are there. Let me show you one by one with examples. Look into the first one. Lower high and higher low. Lower high and higher low between the swings indicates the sideways. This is the first type. Next you will be seeing different types. Look into this example for this first type. This is the first swing. So this is the high of the swing, this is the low of the swing. So swing high and this is swing low. Now look into the next swing. In this swing, compare the high with previous swing. What is that we are identifying here? The present swing high value is lower than previous swing high. So it is LH, lower high. Now compare this swing and the new swing. So this is the recent swing. This is the previous swing. What we have to compare? The low you have to compare. Now this swing low and previous swing low, is it higher or is it lower? The present swing low is higher than the previous swing low. So we get higher low, HL. So what is this point we learned? Lower high. Do we have lower high? Yes. And lower low. Do we have lower low? Sorry, higher low. Lower high and higher low. Do we have higher low? Yes. So because we have lower high and higher low, it indicates sideways. Now the trend is not downtrend, the trend is not uptrend. Now we can expect the prices can be moving in a range. So it indicates sideways. Now let us look into one more type within the sideways. Next type, second type. Higher high and lower low between the swings also indicates sideways. Look into this example. We have a swing high here and we have a swing low here. Now in the next swing, compare the high with the previous high. So what kind of high we are having? So this high is low and this high is high. That means present swing high is higher than the previous swing high. So it is higher high, HH. Now look into the next swing. So now this is the recent swing. Compare the previous swing. So compare the lows between these two swings. Now the present swing low is lower than the previous swing low. So it is lower low, that is LL. What is this point says? Higher high, this is higher high. And lower low, this is lower low. Between the swings indicates sideways. That's why it is a sideways market. So sideways market can be identified in two ways. You will be seeing third way also. That is what I identified. I have invented something else. I will explain in the next slide. But otherwise, the general types are two types. One type is prices are moving in a narrow directions or a specific direction within a range. That is what you have seen in the previous slide. And this one is not narrow range. Actually speaking, it is an expanded range. It is very wide. See here. But wide range, why we are giving for sideways? Because sometimes this wide range is also not clearly defining whether it is the down market or it is the up market. That's why that is also treated as sideways. Actually, this kind of sideways is a uncertainty about the trend, indicates the uncertainty. Because we are not able to identify the movement within the range also. Next, we don't know how market will react. So that's why this kind of sideways trend is a dangerous one. Because the range it is a very wide range. But anyway, this is also one type of sideways trend. And now let us look into one more type I have identified. So I have introduced a concept called equal highs and equal lows. Actually, it makes sense. Sometimes it is possible that the high value in one swing and the high value in another swing might be equal values. Similarly, low value in one swing, low value in another swing can be equal values. When we have such kind of scenarios, we should use equal high and equal low. But here the point is, do the values equal always? No. Sometimes it is nearly equal. The high value of the present swing and the high value of the previous swing, the values may not be exactly equal, but they are nearly equal. In such kind of situation, Because of those small differences, you cannot treat it is a higher high or it is a lower high. You should not treat like that. Because these narrow differences, mainly because of volatility in the market on that particular candle or on that particular day. Because of the volatility changes, there could be some extra movement compared to the previous high, or there could be a less below compared to the previous high. A small difference. That small difference, how much difference we can accept, that's all depending on your experience. You have to take a decision. But you define a small, narrow range, maybe like 0.1% or 0.2%, not beyond that. Within the difference, if prices are there, treat that as a equal high. Do not treat them as a higher high or lower high. That doesn't make any difference. Almost close to previous high it reached. And due to that reason, your practical way of understanding, maybe theoretical way of calculating trends, maybe it is giving you higher highs and lower highs. But practically, those small differences may not give you accurate results. So the moment I introduce this concept, many problems are solved. And better clarity we got about the trend. Because I have developed the software, I did a lot of back testing. The moment I introduced, I found accurate results compared to the without these equal high and equal low concepts. So that is the reason why in my all software algorithms I have developed, I included this concept during the trend calculations. So I wanted you people also should know this because it is going to help you. So at least you people will calculate the trends much accurate than the other people who are not using this equal high and equal low concepts. So let us look into example. Look into this example. So what is the first swing? This is the first swing. So let us identify this is the swing high and this is the swing low. So this is the swing high and this is the swing low. Now look into the next swing. Look into the high of the swing and high of this swing. Both are nearly equal. Maybe there could be a difference of very minor difference. Maybe a little higher than this high. Just that because of that little small minor difference, you cannot read this as a higher high. I didn't feel it makes sense. But what people are, because it is slightly difference, maybe 0.0001% difference. Such a teeny level difference. If you are treating this as a higher high, it doesn't make sense. Now prices are moving in a narrow range. But still your trend will be telling you it is uptrend. That way your overall analysis will fail. Why this minor difference? Because of volatility on this day or volatility on this day, on this candle's day, or the volatility on this candle's day might have given some extra push or might not have given that extra push. Either way it happens. Due to that you see a minor change between this swing high and this swing high. Because of that minor difference, we cannot change the trend. So according to me, this swing high and this swing high both are equal. So I can call this as a EH equal high. If during your calculation, if you find either equal high or equal low, next you need not worry about that. This is by default. The moment you identified this is equal high, then you can call it as sideways trend. Now the trend is sideways. Because we got this high and this high are equal. But if you want uptrend, you should have definitely higher highs and higher lows. The moment you get equal highs, it does not qualify to uptrend. It also does not qualify to downtrend. Because downtrend we need lower highs and lower lows. So equal high never present in uptrend are never present in downtrend. The moment you identify equal high, that swing, it is a sideways. The trend is sideways. You need not worry about this next leg. Actually, these swings also called as a leg. This is the first leg, this is the second leg, this is the third leg. This is another different terminology. This entire move is one leg. No, don't confuse with the leg candle concept. That is, a leg is a candle, that is. This is a general English word, leg, I am saying. Hope you understand how these equal highs and equal lows. So I will show you one more example for with the equal low. Look into this example. This is swing low and this is swing high. This is the swing low and this is the swing high in this swing. Now look into the next swing. In the next swing, we have a low. This is the second swing. In this swing, we have the low. Now compare this swing low and this swing low. They are nearly equal. I am not saying exactly equal. They are nearly equal. Some narrow difference between this swing low and swing low. In such kind of situation, when there are almost, they are exactly equal or they are nearly equal. In that situation, you should define this as a equal low. If it is a high, equal high, that is what we seen in the previous example. And in this example, we are seeing equal low here. Because we got equal low, immediately the trend, we can identify it as a sideways. Because in uptrend or downtrend, you never get equal lows or equal highs. Trend is your friend. Is trend is our friend? Yes. Trend is always our friend. That's why trend always suggests you should buy if the trend is up. You should sell if the trend is down. Buy means long trades, sell means short trades. So there is a famous quote. Let me explain you with the example. What this quote is saying, the trend is your friend until the end. So until the end of the trend. How do you identify end of the trend? When it bends. So the direction is changing, that is called bends. But the people's way of the normal way of the people understand this statement is different from what I am going to explain you. Let me show you, let me explain with an example. I told you, if in the swing, if this is the high, when you have to confirm this is the high, after a considerable move down. Now from this high, prices are moving down. Maybe this level is your considerable down. Now price went beyond this level. That means it confirmed it is high. Suppose price went up to this point, again turned up. Now the same swing will be continued. A minor changes, price going below this, a minor level. You should not consider that is a swing. A significant move from the high, a significant move should be there towards the down direction. Or similarly from the down direction, a significant up move should be there. Then only you can consider this is a swing low. I repeat again, to consider a swing high, from the high point, there should be a significant down move. If that significant down move is not there, you cannot consider that is the end of the swing. If suppose prices went down up to this point, from this here to here, I do not consider this is a significant down. If price went up to here, again turned back, then I consider this entire thing is one swing. But in this example, now price went down in a significant way, comparing from the high of this point. Now I consider this is the end of the swing and this is the high point. The previous candles I didn't show you, but let us assume prices are coming up and this is the end. And to confirm this is the high, there is a significant price down from here. Okay, now from this down movement, down price, there is a significant move towards the up direction. Maybe I am considering if price moves up to this level, wherever it closed up to this level, then I can consider there is a significant move up. Even the high of this candle high is beyond what I am considering the significant move. So that's why I am considering this as a swing low. That way you should understand when there is a swing high and swing low. That means swing high indicates end of the up move. Swing low indicates end of the down move. That is what you have to understand. The meaning of swing high is end of the up move. The meaning of a swing low is end of the down move. How do you know this is the end? From this move, from this point, if there is a significant up move, you need not wait till prices go further up. A significant move. That itself is enough to confirm this is the swing low. To confirm this is the swing low. After that, prices may go up further. That is a different story. But to confirm this is a low, at least from low, a significant up move should be there. After that, how much up it is going, that is a different story. Okay, now we identified swing low. After that, prices are moving up. And again, from here, prices went down. From this high point till this point, I am considering it is a significant down move. Now I am confirming, now only I am confirming this is the swing high. After this candle, I did not identify this is the swing high. After this candle only I identified there is a significant down move. So this is the end of this up move. Now I am calling this as a swing high. But this swing high and this previous swing high, you compare. Is it higher or is it lower or is it equal? It is not equal. There is a considerable up is there from this high. So it went up to this much. If it is small difference, you can say it is equal high. Is it a small difference or a big difference from this high and this high? A big move. That means it is a higher high. This is a higher high. And now from this low point, we have a significant up move, right? So now compare this low and previous low. Is it higher low or is it lower low? So this is high. So higher low. Now again, from here there is a significant down move. So I want to consider this is the end of the swing and this is at the higher side. So it is high value, swing high value. Now compare this swing high value and previous swing high value. Now when you are comparing both, is it higher high or is it lower high? This is higher. So it is higher high value. Now again from move prices from here it went up to this point. After from this low point, there is a significant up move. Now I am considering this is the end of the swing here. So this is the low value of the swing. Now compare the swing low and previous swing low. Is it higher low or is it lower low? This is higher low. Exactly the same way. From here, prices went up to this point. From here low to this is the point. After this high point, there is a significant down move. So now I am confirming this is the end of this swing. And this swing high, previous swing high, I am comparing. Is it higher high or lower high? It is higher high. Not even equal high. This is a much move. Compare it to here. Similarly, this is the low. This low is higher than previous low, higher low. Now from this high point, there is a significant down move. Because there is a significant down move, I am considering this is the end of the swing. And this is the high value. So this high value is higher than the previous high or lower than the previous high? Lower than the previous high. This swing high is lower than the previous swing high. That's why it is lower high. The moment lower high, the moment you get the lower high, now these higher highs are changed to lower high. Now what it indicates? Now it is no more an uptrend. Higher high, higher low, higher high, higher low, higher high, higher low. They all indicates the uptrend. In uptrend always we see higher highs, higher highs, higher highs. Similarly here, higher lows and higher lows. Higher high, higher lows continuously during the swings indicates the up. But all of a sudden, it is a lower high. If it is a lower high, it is no more an uptrend. That is what indicates the end. And this lower high indicates there is a bend. See, compare this higher high and higher high, up. Compare this higher high and higher high, it is up. Now compare this higher high and this lower high. Now there is a bend between these two. The bend means it is not the bend from here to here. Many people think, okay, now price from here to here it is coming down. There is a bend. That is a wrong way of understanding. Many people, they think bend means price is changing its direction. That is the bend. No, it's not the price is changing. It is a higher highs are changing its direction. Now higher highs are changed to lower high. That is what the meaning of the bend. When it is changing from up to down it is coming. See here, from here to here a down price moved. This is called the bend. When it bends indicates end of this up move. That's why our trend is this trend is our friend until this bend. That indicates the end of the uptrend. See, here it started, the trend is started from here to here, higher high, higher lows. Since then, this price movement is our friend only because the trend is our friend. It indicates the price movement is you have to buy during these up and downs. These up and downs are within the uptrend. And one more point I should tell you. In uptrend, prices always move in the up direction. But in between, you are seeing some 2 or 3 candles, some down. Here also some 2 or 3 candles down. What is that down? In any trend, in any market, sometimes you will be seeing prices are moving against to the trend. Prices are moving against to the trend. And that moving against is for a small period. They are called reactions. Prices is moving against to the trend is called reaction. And in stock market terminology, we call it as a correction. You might have heard this word. There is a correction in the market. Correction indicates market is adjusting itself. Why it is adjusting? Because it is moving up. People wants to book their profits. They got sufficient profit. So they don't know what market is going to be. So that's why what they do, they try to book the profit once their targets are reached. Because of that profit booking pressure, prices will be reacting against the trend for some period. Those reactions are not changing our trend. This is the first time. This reaction changed the trend. But this reaction did not change the trend. See, this reaction, there is a significant move. What kind of move? You got higher high. Again in this reaction, there is a significant move. What kind of significant move? You got higher high. But in this reaction, there is no significant move. We did not get higher high. We got lower high. The moment you got lower high, probably assume somewhere here you purchased the stock and you are maintaining for a long term or maybe short term or maybe medium term, whatever it is. But your goal is when there is a change in the trend, that is the time you want to exit. Because now there is a confirmation, there is a change, somewhere here you will exit. when by the time price reaches to this, you might have confirmed there is a significant move to confirm this is the lower high. When there is a lower high, it is no more a uptrend. If it is a lower high, it is not an uptrend. So you will exit from the market somewhere here. After that, what will happen? Either market will go further down or it may give some more reaction and one more lower high you get and further it will go down. Anything will happen. Because in the up direction, if you want to buy your stocks, you have to follow the trend until the end when there is a bend. Where is the bend? Here. The lower high indicates there is a bend. Till then there is no bend. Whatever the prices are going down in between, they are all just reactions. Or in stock market terminology, it is a correction. Correction is a temporary phenomenon where prices move against the trend for some periods, for some small period. A correction indicates prices move against the trend for a small period. After that again prices will go up. Because of those small period the prices are moving, we are getting higher lows. See here, we got higher low, we didn't get lower low, we got higher low. Here we got higher low. We got 3 higher lows here. In all these scenarios, the price is going as per the uptrend, moving as per the uptrend. So we need not worry. When we have to worry, the moment either you get a lower low or you get a lower high. In this example, you got lower high. Maybe in some examples, you may get from here, the prices instead of giving higher low, it may further go down. You will get lower low. That also will tell you uptrend is changed its direction. Is uptrend is changed to the downtrend? No. Uptrend cannot be changed to the downtrend. Similarly, a downtrend cannot be changed to the uptrend. Then how they change? Let us look into that. An uptrend cannot change us directly to the downtrend. How do they change? First, an uptrend changes to the sideways. Then sideways changes to the downtrend. Similarly, a downtrend cannot change us directly to the uptrend. First, a downtrend changes to sideways. Then sideways changes to the uptrend. And you will get clarity on all these points if you practice on the charts. So it is the time to practice on the charts. So far, in all the lessons, I never suggested you to get into the charts. Now this is the first time you have to get into the chart, and today's session you all must practice on the charts. If you are already using any charting software, you can use whichever the software you are using. Or first time if you want to analyze the charts, I can suggest you a tool, tradingview.com. At present, this is the best in the market. At present, maybe in future again it may change. So what you can do, go to the browser, open a browser. Here you type tradingview.com. Tradingview.com, enter. So don't go for a paid version. Free version is more than enough. The free version is more than enough. What you can do is you can register. Somewhere here, maybe I don't know, maybe somewhere here there is an option to register. I think this is the area. You just click and you just check, or maybe click on get started. But our interest is on this. Even without registration also you can access. There is nothing wrong. Go to the products. When you type tradingview.com, you will get this page, and look into the first menu, products. There you have an option called super charts. Click on this super charts. So it will display all the charts. For all the stock markets, you can access. Majority of the stock markets in the world, you can access from here. Mostly the live data also, it will be given in the free version. By default, it is showing you some US stocks. You can click any of these stocks. Or any viewers. I know some of the viewers are not from India. Some of you are from UAE and some of you are from America and Australia. I know. So whichever the stock exchange you are using, TradingView probably supports all the stock exchanges or all the major stock exchanges in the world. So just click here. If you click here, it is a menu. Don't click on this. The next to that, are you able to observe my mouse? So click there and type your stock name here. Whichever the stock you want to access, you can refer this. You can click here. Say for example, I want to type Infosys. So here it is displaying Infosys Limited. So click on this. Infosys Limited. This is here you can see exchange. It is NSE means National Stock Exchange India. Even Infosys is also listed in the New York Stock Exchange. NYSE indicates New York Stock Exchange. Any US people who are trading in Infosys in the US stock market, you click on here on this chart. If it is India, you click on this Infosys. You have a symbol, Indian symbol. So I am clicking Indian Stock Exchange Infosys chart. Now look into this. This is one swing. This is the, look into this. This is swing high and this is swing low. And this is swing high. Compare it to the swing high, this is higher. And compare it to the swing low, this is lower. And in between, there are small moves are there, you can ignore. Let us assume there is no significant move down from this high. Maybe if prices went up to here, I would have considered this is the high of the swing. Because this down movement is little less than what I am expecting. I am expecting even some more below. But it didn't go some more below. So this change I am not considering as a new swing. I am considering these small changes are part of the swing, part of this swing. This is one advantage of going for swing based rather than candle by candle based. Even here also, this is the high, there is some down. I am not considering this down is very small. Maybe it would have gone some more below. So that's why this entire movement is in one swing. This entire, even see here small change. This small change I am ignoring. The point of what I am trying to say, in between the candles, if there are small changes, I am not considering those changes as a different swing. I am considering all these small changes is part of the swing. But where is the major change? Here. Here there is some maybe probably after prices went below this point, I can consider this is the end of the swing. So this is the swing high. Similarly, this is the swing low. This is the swing high. This is the swing low. This swing high is higher high. This swing high is lower high. What it indicates? Uptrend. Now see what happened. Look into this swing high and this swing high. They are almost equal. They are nearly equal. Compare this high and this high. And this high value is 1518.40 paisa. 1518.40 and this high is 1518.25. Both are 1518, but here 0.40 40 paisa and this is 0.25 25 paisa. So how much difference is there? Only 0.15, 15 paisa difference. Just because there is a 50 paisa difference, I cannot call this as a higher high. I cannot call this as a lower high. This is one problem with the reversion. So what you have to do, you need to click, you need to just register this. It is a free only. One advantage of registration is one advantage of the registration is any changes you make on this chart, they will be visible next time when you open. Suppose if I draw some lines, horizontal line. So I want to mark my swing high. So here I have drawn a line. Similarly, this is the low value indicating I have drawn another line. Here I have drawn another line. Here again I have drawn another line. So next time when you open the chart, if you don't register, if you don't register, it is a free registration. If you open the chart, all these lines will be gone. That means whatever the work you saved previously, that is gone. If you register, the advantage is next time when you open, your work will be saved. So that next time when you open, it will display as it is. And in the free version, sometimes they will give some kind of ads like this. You can ignore them. You don't require to pay at this stage. Don't waste your money unnecessarily by going for paid version. You have to go to the paid version only if it is required. But in the free version, there is a sufficient features are available. You don't require to go for that. Once you become a professional level, now you are feeling, yes, I'm able to do everything analysis perfectly. Maybe I want some more features which are not available in free version. At the time you can go to paid version. But otherwise, this is more than enough. Free version is more than enough. And for all major stock exchanges, the data is available in the free version. Okay. So now equal high. The equal high concept is introduced by ourselves. So what this equal high indicates? Now trend is changed to sideways. Now what happened? We got lower low. And here we got lower high. This lower low, lower high, confirmed downtrend. Now see the fall after that? How drastically market is down? Mostly in downtrends, market will sharply, it will go down. So that is the reason why trends will always helps you. It is the right market to buy or it is the right market to sell. Without understanding the trend, if you are trying to buy or if you are trying to sell, mostly you will be buying or selling against to the trend without knowing this concept if you are doing. That means you get losses. Always remember, without understanding the trend, without knowing the trend, you should not buy. You have to buy only if the trend is uptrend. You have to sell only if the trend is downtrend. We can also do buying and selling against to the trend. For that, you need to understand advanced strategies. First of all, why should we go against to the trend? If you know the stocks which are in favor of the trend, why unnecessarily you want to take extra risk? Going in favor of the trend, the risk will be reduced. Risk means not about the risk management concepts I explained in the demand and supply zone. Here, the general English word risk I'm talking about. the risk of your decision. What I mean, your decision is you want to buy. Your decision risk is high because the trend is down, and in the downtrend you want to buy. See, now Infosys is changed its trend to downtrend. You will be thinking, okay, lot of price it is down, so much of price it is down, maybe it is a right place to buy because there is a enough fall in the price. Generally people think like that. See, Infosys went up to this point. Now there is a significant fall. Infosys is a very good stock. I don't think it will not. I don't think it will not go below this point. What do? You will buy somewhere here. Maybe after 1 or 2 days it will go up, and then again sharply it will go down. See how sharply it went down? Exactly the same way. It will go 1 or 2 days up, then again sharply. Because in the downtrend, what will happen? Lower lows you will be getting. Then if you want to buy Infosys, when you have to buy? When the trend changes from downtrend to sideways or sideways to uptrend. That is the time you have to buy. But without changing the trend, if you are buying, that means you are not following your friend, because we learn trend is our friend. Our friend is suggesting, don't buy in downtrend. But we are not following our friend's advice. If you don't follow your good friend's advice, what will happen? Mostly your decision will fail. So hope you understand what I mean to say. So I am giving you an exercise. Next 2 days, you have to practice your trend identification for different stocks. After 2 days only, I will be releasing the next video. These 2 days, you have the work, you should sincerely, you have to practice. While practicing, you may get a lot of doubts. I am sure you will definitely get some doubts. So any doubt, put them in the comment section. I will try to answer all your doubts. If required, I will try if the more doubts everybody is getting similar kind of doubts. So in the next video, I will try to address all your questions. Mostly I will answer in your comment box. If I feel a separate video is required, in the next video I will address. But everybody must practice. You will understand how important trend is in the coming days. You will understand how bad it is going to be if you go against the trend. Once you start investing money in stock market, at the time your whatever you are buying or selling, they may fail because you are trading against the trend. At the time you will understand. The moment we lose the money, we understand how bad going against the trend. So I don't want you people to get into that situation. That's why you should practice the trend calculation. I already told you this is an efficient way of calculating the trends. You are also having one more method that is also efficient. That is as per demand and supply zone point of view. If already one more method is there, why should you focus on this method, you may ask. When you combine both these methods, that means when you check your trend as per this method, as per demand and supply zone point of view, the method, then your understanding or your calculation or your analysis is going to be even more perfect. If this method is suggesting it is an uptrend, but supply and demand zone is saying it is a downtrend, probably you try to avoid that stock because some kind of ambiguity you are getting. If both the approaches are giving the same direction means either uptrend or downtrend or sideways. If both are providing you the same answer, then your decision making is easier. your confidence is much better. So that's why let us follow both these methods while calculating the trend. So this is about the session. Next 2 days, the task I have given, you have to practice. Without practice, don't attend the next video. It is my sincere request to all of you. So next video, I'll be explaining trend calculations based on zone violation. That is as per demand and supply zone specific. The concepts you learn in this video, it is not having any dependency on demand and supply zone concepts. It is purely based on the price action. It is a pure price action. What is that? Higher highs, higher lows, lower highs and lower lows. We applied this concept between the candles. We also applied these concepts between the swings. The next video I will be releasing in 2 days. After 2 days, that is the part 2 of our trend lesson 8 about the trend. So the part 2 is about trend calculation based on zone violation. I hope the information in this video is useful to you, and also I wish you will practice for the next 2 days before we get into part 2. So thank you.